Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors Admiral Markets. As we know, Darren Sinden's away on vacation this week, so it gives me great pleasure to reintroduce Mr. Craig Drake. Craig, how are you? Obviously, Monday morning, it's all about Greece, amongst other things. We go through a number of slides, including the European movers. Everything's on the loser board.
Yeah, I mean, like markets across the board are down, and everything's slumping. We don't really have any earnings out today, so everything's about Greece. We've already seen kind of E-mini futures are down, Dow futures are down, Nasdaq futures are down. Everything before the US opening is down, and we're probably going to see a bit of a heavy selling session once they open. Some Italian financials haven't even opened this morning. You've got kind of sell orders piling up that just aren't being serviced. We're just seeing a bloodbath out there, and there's no liquidity out there. There was no liquidity last week, and there certainly isn't any this week.
China closed down 7%, wasn't it?
Yeah, absolutely.
Which, again, on a different day, would probably be making the headlines.
Yeah, they're down 20% in the last
10 days.
In 10 days. So not a great market out there at the
moment. Sounds like a bubble to me. Okay, well, we've got a number of slides. Let's go through these. First one, data released over the European session.
Yeah.
What caught your attention, if anything?
Yeah, well,
on a non-data day.
I mean, we had US mortgage approvals that came out. They were weaker than expected. We've kind of seen this decline. It's been a kind of a long-run trend in UK mortgage approvals. The Bank of England brought in macroprudential measures last year to try and take some of the froth out of the housing market, to try and put in a few more rigorous checks on affordability levels and that kind of thing. So although we've had slightly weaker mortgage approvals, that's more of a symptom of those macroprudential measures as opposed to a bellwether of the UK economy at the moment.
Okay.
But then if we look at the all these European sentiment numbers, we've had services sentiment, consumer sentiment, they're kind of slightly academic today. Obviously all these surveys are taken earlier in the month, and so they've largely been glossed over. We've still seen some weakening of economic sentiment in the Eurozone. Again, this is quite dated data now, but it has stood up stronger than expected. With the main source of weakness has been in the retail sector, and when we look at employment plans, there's been a significant deterioration in hiring plans from the retail sector. But construction and services have held up, and we've seen that through French data, through Italian data. We have seen that resilience that's kind of built up when we've seen PMIs, and that's largely through to credit filtering down into businesses as a result of QE. But whenever
it's quite extraordinary in terms of the US retail sales numbers. I was expecting after the drop in oil price, the fact that retail sales will improve, and they didn't. It was as if people had a memory of sort of leaner times.
Yeah, exactly. People have gone through quite a protracted recession.
Yeah.
I mean, the hope is, and if you're Keynesian, you're always going to want to see that kind of that velocity, and you're going to want to see people going out spending, and governments love people spending. And governments do not like savers. Savers are a bad thing if you're a government, but people aren't. People do not behave that way. People have gone through rough times. They want to stick out some safety net they want to have a safety net. They want to have some cash in the bank. And I suspect that's what we're seeing at the moment.
Okay, so let's take a look at the next slide. Movers in the European session. Just obviously the headlines.
Yeah.
They're off their lows, to be fair, aren't they?
Yeah.
Last time I looked.
Yeah, I mean, it's not worth going into individual stocks today. Today is not a day for that. The Euro stocks, last time I looked, every single constituent stock of that was down, and that's an agnostic sell-off. There is no, people aren't going into the fundamentals of each individual company and thinking about how Greece is going to affect those. This is just sell. So there's no space for analysts today.
Understood. Okay, so in terms of M&A rumours and movers.
Yeah, I mean it's a thing because we've got such a quiet day in terms of earnings. We've got Investors Real Estate Trust, which will announce its fourth quarter earnings. Analysts are quite bullish on those today, but because of that, Greece is going to kind of drive these markets. We look at these futures prices. Dow Jones futures down 1%, S&P down 1%, Nasdaq down 1.2%. All these futures are down, and we're going to see a heavy selling when the markets open. The only kind of bits of kind of news is General Electric are selling off their fleet business. They've reached an understanding to sell at 6.9 billion to sell off that. And so we've had some selling on General Electric, but because of that lack of because of that lack of news, because of there's lack of earnings, this negative sentiment is just going to drive that US Open.
Understood. All eyes on the US Open. Okay, so in terms of the US data points to keep an eye on?
Yeah, we've got home sales there, and we've got Fed manufacturing numbers. You see, it's going to be quite an interesting
secondary.
Yeah. Yeah,
on a day like today.
I mean, people are going to look at manufacturing indices and things like that, and because the Fed is looking at this kind of data-driven approach to any hikes. But you have got to ask yourself as to how much events in Greece are going to start to sway the Fed decision. Does the Fed want to start countenancing tightening conditions when the world is in disarray? I think they kind of want that perfect, they kind of want it to be that perfect kind of moment in the markets when they do it. And with such volatility, and if this just continue, if the Greeks vote down the proposals for the bailouts, this was going to get run on and on and on. The Greek banks are shut for a week, Greek markets are shut for a week.
Yep.
If they vote no, they're going to be shut for a lot longer. And the Fed, is certainly going to start to take things off the table. September is not that long away, and if we start to see if Greece leaves the Eurozone, I still think Greece will remain within the Eurozone. I still think. And I think, if you look at market,
is that your Bill Hubbard moment?
Yeah, if you look at pricing in the markets, I think most people still think that Greece will remain within the Eurozone. Yes, we're down. Yes, we've had some selling, but we haven't seen the selling that we saw.
We haven't seen capitulation.
Yeah, you remember 2011, we saw days much more brutal than this, and the people today are pricing that that the ECB will step in to do something. So we're going to have to see on that.
We'll see. Okay, so let's move on to our last slide today, the US pre-market movers and some chart points.
Yeah, obviously the euro has been a big mover, that's predictable. But I think, I said this last week, the Swiss franc is one to really keep an eye on. The S&B were moving in to support the Swiss franc overnight. They're
i.e. buying, selling, buying euros to sell Swiss.
Exactly, and they're going to keep on doing that, and that Swiss franc is going to come under pressure. They're already up, I can't remember, 13% on the year so far, 11% on the year so far. There's only so much appreciation that Swiss exporters, that the Swiss economy is prepared to swallow before the Swiss National Bank acts. And that would drive a lot of volatility if we do. We've already seen once this year just how much pain the S&B can cause when they move. Because when they move hard. And so I would,
I'm surprised there's anybody left trading that currency pair after.
But it also drives the rest, isn't it? It's a big sentiment driver for the euro, for everything else. And so I think of those pairs, obviously the euros are kind of a no-brainer as far as watching what's going on there. But that Swiss franc is going to be a key, even if you're not trading it, it's going to be a key kind of sentiment indicator as to what's going on in the FX markets today. Understood.
Okay, Craig Drake, thank you very much indeed for that. That wraps up the Wall Street crossover show. We'll be back same time tomorrow, 1 o'clock. Obviously, take great care out there. Have a good day. Thank you.